Qatar economy and normalization of relationship with GCC. This is an extraordinary moment. We know what IMF has predicted about Qatar during last October. There were investment banks predictions were there. Now again, in December, there are modification of the predictions. World Bank has come out with Qatar's economic outlook in 2021. What will happen on account of the normalization of the relationship with the Gulf neighbors? Now, this is a changing phase of Qatar again. What will be the reflection in terms of trade? What will be the reflection in terms of banking, and again, investments, and how Qatar's budget is well tailored and accommodate a progressive, sustainable journey. IMF has very clearly said 2021 Qatar should be reporting 2.5% and the GDP is 156 billion and the inflation should be in the range of 1.8% for a 2.8 million population. The gross debt to GDP should be in the range of around 61%. Current account balance will be a surplus nearing 4 billion, which is 2% of the 2.5% of the GDP. That's the prime thought. When it comes to the growth, there is a possibility of rebounding on account of the changing dynamics, and investment banks are predicting now it can even touch between 3 to 3.25. Some banks are saying 3.5%. HSBC says 3.5%. Looking at the acceleration for 2022, the run-up to 2022 FIFA World Cup should also anchor the demand growth as final phase investment work is complete and the tournament itself is set to give a major lift to the export-oriented service sector. IMF December came with GDP growth of 2.7% in 2021 as against 2.5% in the beginning. Qatari officials have handled a virtual meeting in December with IMF and they clarified the overall fiscal plans, the monetary policy and the overall hydrocarbon growth, non-hydrocarbon growth. The risk to the forecast mainly emanated from global economic outlook last year. Otherwise, Qatar's progressive scaling up in terms of hydrocarbon growth and non-hydrocarbon growth is a sustainable journey. The budget next year, budget deficit for 2021 is not seen because it's going to be a surplus in real terms because of the growing LNG consumption, the oil price, even though it is conservative at $40. If you take oil at 40, then you'll have a deficit. Otherwise, we know the average oil price can result 50-51. These are opinions of various investment banks. Now, if you look at the big picture, according to the World Bank, Qatar economy is to move faster than any other economy in the Gulf states, a minimum of 3%, and we have reasons to believe 2020 there's a definite contraction of 2%. We have impending challenges in terms of improving the competitive offerings. There are steps taken: public-private partnership, investment laws, real estate laws. These are to be marketed in global terms, and that will intensify further Qatar's inflow of investments. Standard Chartered Bank recently said, again, 3% is minimum. The normalization, easing of the 3-year-old regional dispute will help trade, tourism, and logistics, according to Standard Chartered. Now, UAE lifting restrictions on trade and travel to Qatar could also help the UAE trade recovery, possibly leading to less transit volumes via Oman port and airport, after benefiting Oman by the rerouting. The benefit could be in convergence in Qatar's onshore-offshore spot currency rate. That's very important, as foreign liquidity stands to benefit from the lifting of the embargo. That's again the convergence of onshore and offshore. Nobody can play around on the arbitrage and essentially demean the currency. That's not going to happen. It was tried way back in 2017. Now, normalization of the relationship will fix it, and convergence will take place. Regionally, boost to consumer and investor sentiment, and the geopolitical risk may be minimized, and the economic outlook will be positive for the entire region. Now, Qatar economy will have a significant upturn from the downturn of 2020, according to EIU, that is Economic Intelligence Unit, because of the LNG, global LNG demand. The COVID-19 has triggered sustainable environment. LNG is energy efficient, environment friendly. Also, commercial banks in Qatar have been increasing liquidity from abroad in the form of number of debt issues last year, and cash injections from Qatar government also have bolstered banks' liquidity. The ratio of non-performing loans as a proportion of total loan as historically has been low, and that will have an impact on account of the COVID to start with, but essentially Qatar's sustainable economic upturn will take care of the overall momentum. Now, Qatar GCC trade before the normalization is around 12 billion, 9 billion of exports from Qatar and 3 billion imports by Qatar. And we will see further momentum between 14 to 15 billion, and that's going to be a major opportunity. 15 billion Qatar Riyal is what the forecast is all about for 2021 because of the normalization. Now, opening borders between Qatar and Saudi Arabia is a very good development for overall trade. We'll see smooth flow of goods between Qatar and the Gulf. We also expect the trade of food items, pharmaceutical products, and the construction-related products in the coming months. Apart from flow of goods, the opening of border is also good news for service sector. We will see resumption of movement of professionals from service sector. That will help. On the real estate and hospitality side, the normalization of the relationship should encourage GCC tourists back to Qatar when the pandemic eventually eases. This should help to reduce the pressure on the country's real estate sector and the hospitality sectors, which are the largest source of asset quality challenges in the short term. The sector average stage 3 loan portfolio ratio below 3%, but the stage 2 loan ratio varies significantly among the banks from 5% to 30%, including significant underlying asset quality pressure because of the real estate and construction activities built on normal flow of tourists. It includes hotels and hospitality sectors. Banks with high real estate volume, especially Islamic banks, and within the limits conventional banks are financed. And again, the contract financing itself will be augmenting additional value advantage in terms of total prosperity. On the non-hydrocarbon sector, the Qatar's PMI remained an elevated level in December, signaling that the non-energy private sector economy continued to expand at a relatively stronger pace. The PMI eased from 52.5% in November to 51.8% in December, broadly in line with the overall average. Qatar budget revenue has been forecasted 160 billion, expenditure is 195 billion, the deficit is around 35 billion, oil price taken at $40, as I said. That's a conservative outlook. The main sectors is going to be 25 billion Qatar Riyal on the municipality and the environment. That's good. Education will be 17 billion. And again, culture and sports will be 13 billion, and 12 billion will be on the transportation and communications. So overall, if you look at the bigger picture, major projects have been allocated nearly 72 billion Qatar Riyal for various projects, including FIFA 2021. So overall, if you look at the outlook, the normalization is going to add further value, the trade is going to improve, the hospitality sector will get more occupancy, and you will have a free flow of goods, and geopolitical risk will come down, and Qatar's ability to go to international market and borrow funds at times when it is required, sovereign as well as the bank's financial requirements can be easily fulfilled. So it's a good development. Qatar's economy will continue its journey as a strong and sustainable, value-driven performer.